G'day everyone, welcome back to Pete's Investing and Trading channel. Today we are trading the CCI14 strategy with the average down approach and comparing a 5% gain and a 5% decline versus a strategy of using the Awesome Oscillator with a 5% gain, and see which strategy is more efficient to trade. Stay tuned until the end of the video where I will cover some of my investing rules for safer trading. Don't forget to review our playlist which cover trading strategies, share price and indices reviews, and this video will be covered in the strategies playlist. The strategies playlist where we cover the simple trading strategy, the average downer process and some money management ideas. We're not offering financial advice, but rather this is an educational series to help you make better trading decisions. So let's get started. I'm about to demonstrate the entry and exit strategy with two scenarios. The first scenario is where we enter the trade when the commodity channel index 14 period crosses over the zero line. We exit the trade when the closing price gains at least 5%, and we average down when the close of the day declines by at least 5% when the CCI14 breaks above the zero line. We then buy double the quantity of shares from the previous trade we made. Now this is our regular strategy we use, and we're now testing it against some other strategies and see which one comes out on top. The second strategy demonstrates an entry when the Awesome Oscillator crosses over the zero line, exit when the price gains at least 5%, and we average down when the share price drops by at least 5% and the Awesome Oscillator crosses over the zero line again. Note the Awesome Oscillator is standard in most charting software trading, and I try to use these very basic entry and exit techniques so you don't have to develop or follow any complex strategies. I track the share prices for the following companies since January 2021. I do this so I can't be accused of cherry picking stocks that do well. Some of these stocks have performed well, others have not drifted sideways, and others have declined. But as you will see, they all return positive results as far as revenue goes. So let's now go to our first chart, which will be JP Morgan, one of the US stocks. Let me first of all explain what's on this screen. Down here we've got the price chart, and I'll zoom in a minute to explain in more detail. This is a profitability chart of the CCI14. This is a profitability of the new Awesome indicator strategy. These little steps here indicate the number of trades we've entered to get into the trades. In other words, here these are all singular trades. Little one steps are singular trades, and where it's multiple like this, it means we've entered once, twice, three, four times $2,000 lots. Each of these stocks we're trading $2,000 lots. So here we entered our first $2,000. Here we've got another $2,000, so now it becomes $4,000, $6,000, $8,000 invested in this stock at that point. This one again is a stock's number of trades entered for the Awesome indicator. And down here we've got the CCI14, and again I'll zoom in a minute, and this is the Awesome Oscillator. Again, both of these are standard on most charting software packages with your broker. So this is looking at JP Morgan. As you can see here up here, the profitability so far, we're still in a trade for these, is 8,300, 8,304 for the CCI14 strategy. This one has generated 48.43. Now this is in Aussie dollars. Let's quickly look at, I'm going to go through these fairly quickly. Let's quickly look at the Commonwealth Bank. So again, very similar scenarios. You can see here, we've entered in multiple times in both the CCI14 and also the Awesome Oscillator strategies. Difference being the CCI14 strategies generated 14,604 since 2007, and the Awesome Oscillator has generated 7,155 since 2007. Just notice as well on the price chart, this is the GFC effect between 08 and 09. And then we come back to 2020, that was the COVID outbreak. And more recently, you can see here the effects of that little decline there was the Ukraine war crisis. Let me just drill down here. Now, very simply, you can see here, we enter the trade there on the CCI14, it breaks above zero. We enter the trade and we don't exit the trade until the 5% gain has been reached. And this was where the Awesome Oscillator broke above zero. We enter the trade there and we exit the trade there when it reaches our 5% gain. So if I move this 5% gain box You can see there, it just tipped it and it possibly could have closed it out there. But it kept going in our CCI14 strategy. And it closed out there when it hit above 5%. And the Awesome Oscillator, you can see there, it entered the trade at that point there. The Awesome Oscillator, breaking above zero. So it went long there, and it didn't close. The price declined, but then it broke above there, and it would have just closed out at the top there, greater than 5%. It just closed out with that 5% gain. It's starting to go declining again. So it closed out in those little examples there. That's a single trade, one lot of shares entered. If I drill down on this one back here, you can see here both the CCI14 and the Awesome Oscillator broke above their respective zero lines, separated by a day. Again, we're looking at the daily chart here. So the Awesome Oscillator entered early, the CCI14 entered a day later. They both went tracking along because the price declined, so nothing really happened until it got at this point. The CCI14, it declined by at least 5%. So let's make our ruler. So from there, 5% decline would have been roughly there. So it was less than 5% at that point. The CCI14 is still below zero, so we don't enter any more trades until it breaks above zero again. And it did so there. So two criteria. It needs to break above the zero. The CCI needs to break above the zero line. It needs to be below the 5% decline in share price, which it met. So we entered another lot of shares there. We'll just continue with the CCI14 example. So it kept going. And the new average now is no longer up here. The new average is down here somewhere. And that is now 5% gain from the new average, which is about halfway. So it breaks above 5% gain and it closes out the CCI14 there with those two entries that we entered back here. You can see there the profitability started off here. If our baseline was 100,000, it started off at 13,806 and it closed out profitability at 14,170. So it made a nice little return in that roughly 3 months period. Similarly, the Awesome Oscillator entered a day early and closed out a day later. And very similar, it entered back there in a similar price. And again, our entry rules are the Awesome Oscillator must break above the zero, which it has there. So we enter the trade there. The price has declined by at least 5%. And we don't enter another trade until the Awesome Oscillator breaks above zero again, which it did there. So we enter our second lot of shares there. And again, very similarly, it closed out those two positions because it broke above the average price of the two trades. And again, that started off with a profitability there at 6,377 and closed out at 6,718. So it made a nice little return of a few $100 as well. Now, you might say, well, what's the big difference between that and that? Because they've been doing very similarly overall. But again, looking at the overall picture, you can see there the CCI14 strategy returned a total of 14,604, whereas the Awesome Indicator strategy using that approach returned 7,155. I'll go through the table in a minute, showing the results. Let me just quickly go through a few more shares as an example. The BHP stock. Now you'll notice BHP has gone fairly bit of a roller coaster ride as well. You can see there the results of entering multiple trades in both the scenarios, both the strategies. This one returned 16,691. This one returned 6,977. So this one returned $10,000 more. Johnson & Johnson, another US stock. This had a more positive share price return. You can see here during the sideways movements, there were more multiple entries. And when the share price goes more in a northerly direction, there's less volatility in terms of share price additions, stock additions to the trades. Show you a couple more from Europe. Volkswagen. You can see it here, it's pretty flat, whereas multiple shares were entered here. But again, the CCI14 strategy returned 15,772, the Awesome Oscillator 6021. And lastly, Telefonica. This is one of those stocks that's been declining not one of our best stocks, but again, I'm using these as standard across the board since I started making these videos back in the start of 2021. I want to be consistent in showing good, bad, and ugly results in terms of share price movement. So you can see here more stocks added, especially when the price goes against us. Here we're holding 1, 2, 3, 4 entries on the CCI14 strategy, and it's broken above the break even there. Likewise, in this, the Awesome Oscillator, 1, 2, 3, 4, also 4 entries made. But again, we're breaking still above in a more positive return for the CCI14. So let me now quickly go back to the the table of results. So again, this is the CCI14 table of results. That's our little trading rules, and this shows the results of each of those companies are demonstrated in the charts. This shows a profitability, number of contracts entered, and if you're trading $2,000 lots, for example, on a CBA, we entered 5 at the maximum number. We entered $2,000 lots, so in other words, we needed $10,000 in our account, but the maximum drawdown was $10,354. Profit over drawdown is simply the return, 14,604, over the total drawdown, which is 20,000, so about 72% profit over drawdown. This just breaks it down from the start of January 2007, 183 months until today, returns roughly $80 a month in revenue. And you see the results of the other ones. You can pause the video and just digest those. And again, just be mindful, some of these are Aussie dollars, some in euro, and some in US dollars. But I'm just summarizing all in dollar terms, but there'll be a mixture of currencies in there, just to keep it simple as an example. This is the Awesome Oscillator logic, and also the returns as well. Again, very similar. You can pause the video and digest it, but you can see there the monthly revenue of 229 versus our CCI14 of 473. And I've got another chart here, another table, which summarizes the overall results for those stocks. So the Awesome Oscillator generated 41,988 versus our CCI14 strategy generating 86,500. Again, very quickly, that's 86,500 versus 41,988 versus the maximum drawdown of 80,000 and the CCI14 maximum drawdown 143. So just be mindful, what we're aiming for is a higher profit over drawdown, and that's simply looking at profit over drawdown is 60% versus this one is 41 over 80 is 52. It shows a monthly revenue on average 473 versus 229. So just be aware when you're trading these, the drawdown is what may cause a bit of panic if you're not really following the rules. Just be mindful that you need to stay strong and make sure you've got funds in your account to add to more shares if you need it to get benefit out of this. So again, what we're looking at in terms of the entry strategy, we covered a simple strategy, which is a better profitability of the price increasing from our entry point. There are many videos which show you how to enter a trade, but most of them don't clearly explain when to exit the trade profitably. In this video, we showed you an effective way of exiting the trade profitably. Note also we don't use stop losses. That's a sure way of minimizing the returns and more often than not, losing money from your trading account. Instead of stop losses, we use the average down strategy with some disciplined money management. We show how to effectively average down and ultimately close out the trade profitably. This approach has been back tested on stocks, CFDs, commodities and Forex currencies. Again, the key here is good money management approach, especially in trading in leverage instruments such as CFDs. In today's video, we traded buying stocks outright with your own funds. That is not leveraging off borrowed money. We show the calculated funds required when following the drawdown approach. We go back and start of 2007 to back test the shares covered in this video to show the effects of the GFC during 2008, 2009, and more recently the COVID and Ukraine conflict downturns. And lastly, on average, we show the returns that it would have generated had you traded $2,000 lots per trade, which has been factored into brokerage. These returns do not show the returns of dividends, so any dividend payouts would have been added as extra bonus revenue on top of the trade returns. Some of my investing rules: buy proven blue chip stocks only, avoid speculative stocks. This to ensure probability of the shares of the company you are buying has had a good track record and more likely potential of future growth. buy stocks which pay dividends, do a quick search of the stock before buying it to ensure it recently paid a dividend or about to. This is a good indicator that the company has future potential of growth. If the company recently, that is 6 to 12 months ago, has stopped paying dividends, it may be a sign their growth potential may be challenged for whatever reasons. Don't short positions, go long only. Even though our strategy can be applied to CFDs and other leveraged instruments, in this video we only trade in shares we bought with our own funds. That is, avoid borrowing or leveraging funds to minimize risk. Also, if you short a position which pays a dividend, you'll end up paying that dividend to someone else who went long on the same instrument. And do not trade on news. Price is always factored in the share price. If you read an article in the finance pages which talks about an event on the stock you are considering, the chances are it has already been factored in the share price, so you've missed that boat. I did a video in September 2021 titled Uranium Stock Too Late to Trade, which demonstrates the effect that news has or hasn't had in the share price action. I suggest you watch that video. Don't forget to click the subscribe button, the notification bell and the like button, and happy investing, and see you in the next video.